Hello traders and market club members everywhere. Well, it's the first day of summer, officially back at work, I guess, and I hope everybody had a great Memorial Day weekend. But we found three stocks that we want to share with you today. The first one is Public Services Enterprises. The symbol is PEG. We had a symbol buy monthly trade triangle at 43.69. The market's at 43.27, and this is what I'd like to see us do on this stock. If we see a pullback, and this is the key level that we're going to be looking at. Not so much the price, but we're looking at more of the support at the 50 line right here. So it's pulling back. So when this reaches the 50 line, which I'm guessing could be somewhere maybe around these levels here, we want to be a buyer. Again, the trend in this stock is clearly up. We are looking to buy a pullback to support on the RSI 50 line. This is the symbol we're using, the technical indicator RSI, pulling back to give us the opportunity to get long this stock. So let's take a look at our next stock. That's Alibaba. We talked about Alibaba before. It's breaking out. We think this stock can go quite a bit higher. And if we scope this out just a bit further, let's say to 1 year, we were looking for this to go, let's just put a Fibonacci number in. This is where we're going to, so we go to the very low here, right here. It's going to be the 103.68 level. That's our 61.8% correction, which is very, very doable. I would say maybe realistically, you're looking at somewhere in this area right here, right around 98.78 will fill the gap, and I think that's a good thing. But the base we have on this stock is pretty impressive, and it would look as though it wants to go higher. So this is the base we're talking about. If we see any further weakness in the stock, back to the 50 line, again on the RSI, I think that's a great opportunity to be a buyer, providing that our trade triangles, especially the weekly and the monthly, are still green. That's the important element here. Let's move on. Last stock we have for you is Tyson Food. I'm going to get closer in on this stock. I'll make it 6 months. And you can see that we have two green triangles and one red. Don't pay too much attention to the red. That's only a daily one, very, very, very short term. But again, the stock was very overbought. It's coming back down. Look at the 50 line as an opportunity to get long this stock. This area here is going to provide support for the market. And I would say right around these previous highs, if you just project that over, so around 42.5, it's 42.78 right now, should provide support. But more importantly, look at where this turns back up. If we get down to the 50 line, that's going to be an opportunity to be a buyer in this stock, as all the trends are positive. Pretty much the same with the S&P 500. We're back down to support. Look, we're right on the 50 line. I think this is an area where you could find good support. And the other thing I want to point out to you, which is very interesting, is a cycle that we found in the stock index. So here we are. If you just go from, let's say, this level to this level to this level to this level, you get a very similar cycle in terms of the number of days. I think it's trending about, I think this is 14 days here, and this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So it's 14 today. So this could also be a fact that one of the other previous months was 16. So you may have a couple more days, but you're back on support here. This is the important thing on the RSI. I think we'll find support, and I think we'll see this market improve later on this week. Pretty much the same rhythm in the Dow. You're right on the support line, 50. Should find support, 55. Right now it's a trading range, but we still like this market from the long side. NASDAQ a little bit differently. Remember, we have a red weekly trade triangle telling you it's exactly a trading range, but we're getting back down to an area where you should be looking to buy, and it gets to the 50 line. So watch that very carefully. If you're a Market Club member, you should have the RSI indicator set up and ready to go. We're just using the defaults here. Now gold took a big tumble today. See how it's fallen below the 50 line right here? It looks as though it wants to set up and test possibly the 1170 area, 1180 area, but nonetheless, it's certainly on the trading range side. It's not something to jump into at the moment, especially when you have a very, very sharp down day. A lot of liquidation today in gold. Let me just go back to gold for a second. One thing I want to share with you, we trade gold on a weekly and daily. So the weekly is still positive, okay? But the daily, if I put that in, we've been out of this market since $1,212.70. Let me just put that in. You'll see that there it is, $1,212.75. So even though the market's down here, we've been out on the sidelines, and that's how powerful these trade triangles are. This is crude oil. Crude oil kind of stuck in the middle, a little bit below the 50 line. A little bit of a concern. I'd be more concerned if we closed below this area here, which is 57.93 was the low. If we close below there, that's another 50 points lower than we are right now. I'd be more concerned. Now the euro dollar, what's interesting here is we're way below the 50 line. Lots of stuff going on with Greece. But I think what's going to happen here, we're getting very, very close. I'm just going to draw this in for you. We're very, very close to a Fibonacci retracement level. And 108.73, we've been down to, I think, as low as 108.85, so it's very close to that level. I think the Eurodollar is going to start finding support around these levels, but we'll see. Give it a few more days. But all of our trade triangles are down. There's no reason to be long, no reason to be picking bottoms, but I think this is where we'll find some support for this market. Hey, I'm Adam Hewison. It's good to be back. I hope you had a great Memorial Day weekend. I'll be back tomorrow with some other ideas for you, so have a great trading day, everyone.